Perhaps Janet Yellen could say something to calm the markets. There's an awful lot of bearishness with the January barometer being bearish. The Super Bowl indicator and AFC Team 1, the Denver Broncos. You have North Korea setting off ballistic missile tests after a hydrogen bomb test. The bearishness is, fear level is climbing in the VIX, not to the same levels as it was down here. So I have a hard time wanting to get on board a crash call here. In fact, I wouldn't be surprised if we get some type of low and turning point in here in the next couple of days, and then some type of reflex rally into the late March, early time frame. Not sure what the what's going to be behind it, how the dollar is going to react. But getting back to the dollar, from last week's call, I said you could have the majority of the move in the dollar index complete in a few days, similar to what happened at the March lows in the euro and the March highs in the dollar. Here's your dollar index chart. Very similar looking patterns. We have this. After the first break, we had one rally and then grinded down to lower lows. Same scenario here. Very possible that the dollar already finished its bounce at 97.50. I'm going to be looking for dollar selling opportunities maybe back around this 98 and 98 level, especially if the market stabilizes. To me, it looks like there still is potential for another high in the euro, back above the 113 level on a back test. What I did get right was crude weakened, and we had a nice little takeoff in the commodity currencies. Crude bottomed. I was looking for bottoms between 38 and 36. 36 ended up being the number. And crude sold off pretty good late last week, giving a lift to the Canadian dollar. Still looks pretty negative here to me. See if we're just going to wash out here to one more low down here around 26. Hasn't done anything right yet. So it's my view this is a chance for Canada to do some type of fib retrace. Still think there are people talking about new highs in Canada. My preferred scenario is that we get a sell-off, maybe put in a higher low here, another buck or two lower, and then get a third drive rally. I'd like to be a seller in Canada up above 142 for a move down to 130. So it may take new lows in the crude oil market to generate that kind of upside in Canada. Rally about 300 pips off the low, 400 pips, but still has a ways to go to complete the 61.8% retrace of an 1100 pip decline. Something I talked about, I said Euro Aussie could get up to 57.60 to 58 for a sell. Said you could ride that up to that third drive line. That is manifesting today. We may be looking at the turning point in Euro Aussie. So I've begun to put my toe in the water in there. I'll scale if we get back up to above 158. So I'll get to that in a minute. Here's something else that surprised me. We're having a blow off in gold. But I didn't think the blow off was going to happen in gold to this extent. I was talking 1160. We're pushing 1200 now. But I did say that Canada could be vulnerable. Aussie could be vulnerable, and the Aussie went the direction I thought it would, but the gold continued. Here's your gold look. Here's your June contract, actually becoming parabolic to the upside now. I have a difficult time chasing parabolic moves. You would think this would be constructive for Aussie. So down here I liked it. I thought we'd see 1140, 1160, but it's turned into a blow off. Maybe a pullback and then 1200, but definitely much more powerful than I thought it would be. I can't buy it here at 1195. I can't short it here, too much momentum. I will be looking for some, if this is completing a wave between here and 12.20, I'll be looking for pullbacks maybe back towards 1100 down the road later in the spring or summer. I'm not going to chase a market like this. Usually it comes back to bite you. So the goal is to stand aside. It should be supportive to Aussie. Perhaps that's what's going to be behind the Euro-Aussie sell-off. With the market crashing, of course, the bonds are rallying, and the yen took out the 116 level. I've seen targets at 114, 114.90. So here we are. Bonds making new highs. This looks like 1, 2, 3. Maybe we're getting closer to a peak. I would not press the short side of the yen down here, especially if I'm right about all the bearishness out there in the equity arena, and some type of calm comes into equities. Some of the flight to quality in gold and bonds may also come out, and we could get some type of bear market rally in the US dollar yen. I'm thinking from 115, 114, at least some type of bounce, which from the 121.5 level was 700 pips, so why not a rally back to 118, 119 in US dollar yen. Give me why if you're with me. So risk off has been driving gold. Risk off has been driving bonds. Risk off has been driving crude lower, not quite at new lows. Risk off has been driving US dollar yen down. And risk off, I would have thought, would have led to more dollar weakness. With this kind of sell-off, you would think the euro would already be above the 116 level. The 116 level is a line in the sand for the bear argument in Euro USD. I'm thinking we have 113.60 in it. Any questions on the outside markets? Gold having become a moonshot, just like the Korean rocket. Bonds being a place where people are hiding out, while the S&Ps, which I was a negative up around that 2130, 2100 level. Hard for me to get bearish down here at 1800. Give me a Y if you're with me. Okay, and with that, we'll go to our individual instruments. Always start off with Euro USD. So actually, there was a third drive to a top formation here in the Euro USD after the NFP, the jobs number. The headline was weak, but the dollar rebounded on it. It's like the dollar rebounded Friday. I still think that there's a distinct possibility that we're going to, this was a line I've had for a long time, intersects up here around the 113.60 level. So for now, I'd like to finesse buying opportunities, old support, old resistance. At this horizontal line is new support. So the other significant resistance level was here at 110.80. We didn't quite get to it. So if the dollar has a bit more of a rebound, anywhere between 10.50 and 9.80, look to me to be a buy zone for this final push up to above these levels up towards 113.50, 113.60 in the days and the weeks ahead. Give me a Y if you're with me. EG is now poised at new highs, challenging the highs. Back here when I liked it at the 70 level, the measured move was 79.80. We're not quite there, so we could still push up another 150, 200 pips in EG, which favors the euro long over the pound. So the pound also came off pretty good after the jobs number. We peaked up here with the divergence. I'm thinking between here and 143 you have to buy it. The only difference may be that the pound, maybe all it does is retest the highs up towards 156, 146. There's a parabolic there. There's a 50-day moving average at 46.89. But I still favor on a little bit more weakness in the pound. Maybe from here that there's another rally to retest up here, the 46.30 level. We get through these highs, then you're talking about the next fib. But so far we failed from exactly the 50% retrace level. And under today's lows, closing under today's lows, you have the bear flag, and we're on our way to new lows towards 41. I favor buying the break in euro and looking to sell the rally in the pound, but not from here. And even counter trend trades looking for 146 again in the pound dollar. So looking for the dollar to come off again. And retest those Dixie lows, but the better structure is in euro over USD. So before we get to, well, let's go to the yen. The yen is breaking to new lows. We're starting to diverge on a few time frames here. We've traded as low as 115. No divergence here, but I just cannot chase this type of decline in the market. In fact, when you look at the daily down here in the yen, we're making new lows, but we've been diverging for a while. Okay, we have this third drive to a bottom, a trade that I recommended that we caught and got out at 121. I missed this whole decline in USD yen outright, but caught it in yen crosses with my recommendations of being short Aussie yen, the guppy, and euro yen. So this is my reason for caution. It's very possible that we're going to set up some type of tradable bounce here. Why not back towards this 118 level? If you're bearish yen, I have a hard time, even though we're taking out these lows, of wanting to chase this yen. I'd be looking for some type of fib retrace off this decline, and favor actually looking for long side entries and reversals between here and 100 lower. I'd like to see 1490, panic some people under the 115 level. We didn't quite get there, 1570. So watch this market at new lows around 1490, 1450 for something counter trend, and then we get some type of retrace. I'll just put it down here under 115. Let's get rid of these. I think there'll be better shorting opportunities more towards the spring, so let me just go with the 115 level. So halfway back is going to be about the 118 level, so there could be a nice help from under 115 back to 118. 61.8 is going to take it back to 19. So don't jump on the crash mentality here. Maybe another day lower or so, and then looking for recovery, just like I'm looking for another push up in euro and a recovery in the pound back to last week's highs, and the euro new high. So as the dollar weakens a bit more, the yen possibly pushes down towards 115. Give me a Y if you're with me, and that you get that it's a little late to come to this bearish party of risk off in the end, and it'd be more prudent to wait for a reaction, maybe Yellen's testimony before Congress is going to be the catalyst for that event. Give me a Y if you're with me. So an update on the euro crosses. Down here, I said I'd look for some type of bounce. I have 125 as a longer term target, all the way down here in euro yen. So you got to sell rallies again. Don't do anything in the hole. Maybe rallies again back up towards 129, 130. If the yen stabilizes and the euro can regroup after a dip. don't get short in the hole, although I'm looking for 125 to complete. I prefer to sell a rally in Euro Yen. Same in Guppy. You know, we've been bearish since the 175 level. I talked about this 175 level a week ago up here. We had a nice divergence up there. Now I'd be looking for recoveries possibly back to the 169. I do believe these lows are going to give way. So looking for recoveries back to 68, 69. And really the worst performer, even worse than the Guppy, has been Aussie Yen. And Aussie Yen, I don't think you want to chase this either. We talked about it up here. It was a big trade. So you want to wait for rallies and all the crosses to recommit. If you're still short from a week and a half ago, ring the register. They were all big winners. I missed the end, but was bearish all the crosses that I cover here on RoboForex.com. So you should have done okay on the crosses, and it was from up here. So just a little macro view. You know, we're not making new lows in Aussie Yen. This could just be a fib retrace and we head back up. So I've turned neutral on it. I don't want to be short the crosses here. Maybe the Euro cross if we head up towards 129, 130 before getting to 25. And the Guppy, I'd stand aside on the Aussie Yen cross. Look at this daily, we're still well above the highs. Whereas when you look at the Euro Yen daily, similar situation, but I think we're headed back down here. And the Guppy daily might be your most negative. We're almost at new lows in the Guppy. I believe we are headed to new lows in the Guppy. So your weakness still continues to be the Guppy over Euro Yen. Pound being the preferred short. Been talking about that for a while since Euro Pound still hasn't reached upside objectives. I've made a misstep or two. I'm looking for pullbacks in Euro Pound, but also have been flexible enough to get long once we pulled back to 74.25. Now looks like that 78 to 80 level is in the cards for Euro Pound, which means that the pound's going to be a relative weak performer compared to Euro. Give me a Y if you're with me. So over to the commodity currencies, I had this line in last week. We got just a little bit above it. Nice divergence, nice pullback in Aussie. Aussie to me looks like it should still have another shot up to the upside. And I'm not as negative on the Aussie as I am on because of the Euro Aussie. So down here last week, I said look for the 61.8% retrace. If you rode it, you made some nice money, 300 pips. I had the 730 level at 61.8. We almost got to the 70% level. We're diverging up here, my toes in the water. I'd continue to sell all the way up to 830 with stops over 950 because I think there's potential that we might be getting a turn here, that this is just a retrace of this initial decline, and that we could end up with something like this from here, especially if the dollar reasserts itself or one more high in the Dixie up towards 102.5. So starting to get that reason. We were waiting for this rally and even said people could trade a counter trend up to the fib level, and we were down here when this was happening. Now look for reversals. I think that we've seen the first sign of a reversal, a couple candles here. So negative on this pair. I think there's potential for a pretty big move here too. Initially back towards major support at 52 to 54. But kind of a neckline here again at this level. This horizontal line has been a big pivot at 153. That could take us down to 46 longer term all the way down here. So this was a special situation that I began to talk about last week. I believe we're there. Give me a Y if you're with me on Euro Aussie. So here's something else I got right. I was looking for the crude oil to sell off with risk, and we did get a nice little pop in the USD CAD based upon it. I said between 38 and 36. Not the greatest divergence on the 4-hour, but in my view, I think that this could just be the first wave, the first A wave up to 139. So almost a 300 pip move. I'd be looking to buy corrections in because eventually my sell zone is up here at least 50% at 41.70 with a possible, here's the updated bid on it. I think that 42.70 is now 61.8 back. Which was an 1100 pip decline. Yeah. So your 50% retraces at 41.70 and your 61.8 is closer to 42.70. So we're going to need some more crude weakness for this to occur. It's just not enough to me. It's not even 38%. These lows may hold unless there's a huge reversal in crude oil back to the upside. I think that we're going to eventually work our way up towards these fib levels, 51%. I know guys that are talking about new highs, but I'll take it a step at a time and just be looking for retracements, because I could still make the case that we rally, say, back to 42, and then we have one more decline towards 130, and crude is 38 bucks then, or 40 bucks. And then crude completes this bear market rally and heads back down to 20 or lower, and that's what could take Canada back above these old highs. But I think it's going to be a process. It's going to take some time for it to unfold. So I'd be buying breaks in Canada, maybe some type of fib retracement between 138 and 137.5. This could be A. This could be B or 2, and then we're going to get a 3 into this zone. Give me a Y if you're with me. On USD CAD, its correlation to the oil. And I'm not turning immediately bullish, but we may see one part of the wave here already completing. Possibly we get to here and have some type of neckline. So this could also set it up here with a neckline at 140.5. And the low 6.5 could take us even back towards 43, 44. So instructive still on Canada. Buy pullbacks. Give me a Y if you're with me. Kiwi really rangy. I don't have any major ideas here. Perhaps we're setting up some type of ascending triangle here in the Kiwi. We need to close over the 68.70 level to give us the possibility, if we get back above this neckline, above 68.70, then we could get back towards the 73, 74 level. And with what certain commodity prices are beginning to do, you could probably try pullbacks here at 65.19 to 450 with stops under this low. Or just be patient and wait for a breakout over 68.5, because that's going to measure pretty good. Give me a Y if you're with me. Okay, Euro CAD. I also think the Euro CAD, just like the Euro Aussie, may have completed here. I was talking about a retrace back to this 50% retrace of this level. Still possible we could head up to 57.25, but this is a pretty negative chart to me as well. that this is going to end up being a failing rally. I think I'd be patient and wait for 61.8 back. That's going to come in right around this 157.25 level, then risking 100 pips and looking for a continuation move to the downside similar to this. That could take us back down to 149. And this could end up being the head of a head and shoulders, this being the left shoulder, this being the head. So to me, Euro CAD is also a negative looking chart and a very directional decline and a pretty weak rally. I'd be patient, wait for 61.8 back towards 57.60. Give me a Y if you're with me on the Euro CAD. So just to recap, again, there's a lot of fear in the markets with what's happening in global equity markets, and there are good reasons for it. The banks, last financial crisis, the epicenter was the US. This time it's most likely Europe. Deutsche Bank is now trading at crisis levels from 2008. Pervasive bearishness here. I'm thinking there's going to be some type of turn going into the Yellen testimony this week. I believe it's tomorrow or Wednesday. Might be 2 days. They used to call it Humphrey Hawkins Day. Again, on the dollar, I'm still not convinced that the low that we saw last week was going to be it, especially against the euro. So looking to fade dollar strength here. We get another push up towards 98. Remember, this 98.50 is our line in the sand. And until I have other clues, until we start taking out 98.50, I have to give the bias to the downside, the benefit of the doubt. So looking to sell rallies. So euro back at 110.50, 109.80 is a buy zone. Looking for that 113 level to be retested in the euro, which I have confluence up around 113.64. I would wait for these pullbacks into these zones that I talked about, previous resistance at 110.85 and again at 109.80 would be buy zones that would make me interested in that. Not going to fade it and top pick it here. I did it Friday. Right now it's kind of neutral. So I'm either a seller at 113.60 or I'm a buyer between 10.5 and 109.80. I think once we get up to 113.60, again, we could be looking forward towards playing alongside the dollar across the board. This, again, this was on our watch list from last week, looking to sell Euro Aussie between 720 and 58. I think that we're getting a potential reversal, that this was just 1 or A, and this is B, and we're going to get 3 or C to the downside. So like this Euro Aussie trade, and again, still thinking that Canada, before I get bearish again, can still rally back to some fib levels that are now updated. We're getting a pullback here. Think that on this pullback we'll get a higher low, not just crash to new lows, and then get maybe 1.618 of this would be, close to 500, 480 pips from 137 to take us up to this 4180 to 4270 level down the road. That's where I believe we're going to have a much better shorting opportunity in USD CAD. Any questions on anything that I've covered? And don't get carried away with a lot of fear in the yen. Again, look at this daily. As bearish as this price action is and as impulsive as it is, and although we're breaking down under the 116 level, we are diverging. Look at this thing and see what happens short term. Start looking for some momentum divergences. We're starting to get the shades of it yet, but still under 30. So I'm thinking perhaps under 115 one more time. Perhaps we bounce, they slam it one more time, and you're going to have nice divergences not only on the daily, but you're also beginning to get them in the 4 hour as well. Any questions on anything I've covered today? Or anything I haven't touched upon? Any pairs? Any instruments? Okay. Well, good hunting, everybody. Thank you for your attention. I'll be back with you on Wednesday.